Have you heard the speculation about an upcoming recession? This statement isn't just speculation anymore. The housing market has consistently shown a downturn in prices for a couple of months. But what is the real reason behind this downfall, and what lies ahead in the housing market sector of the U.S.? We'll take a look at all of that in today's video, so stay with us until the end. The Case-Shiller index, which is the widely used indicator of the housing market health, has been on a downward curve since July 2022 till the end of the year. That's 6 consecutive months. The peak point of 308.35 in June fell to 294.6 in December. This is a 4.4% dive, and there are clear chances of it falling even further. Another thing indicating the crash is the median new home selling price. The index shows an almost 15% drop between October 2022 and January 2023. This is a significant decline that suggests a major shift in the housing market. One potential explanation for this phenomenon could be the current state of the economy, or what we're being told, that the housing market is facing a supply shortage of houses. When there's a shortage of something in the market, the prices tend to go up naturally. This is how the sellers earn profit. It happens everywhere, so that reason can't be fully rejected. Some people went ahead and called the lack of housing the root cause of all our problems. The housing market was reportedly 1.5 million to 6 million homes short. What led to this shortage is another story. It all started when we saw the Great Recession in 2008, which had a lasting impact on the industry, with many companies scaling back their construction efforts in response to the economic downturn. This led to a shortage of available homes, as well as an increase in the prices of existing homes. However, just as the industry was beginning to recover, the COVID-19 pandemic hit, leading to widespread material and labor shortages that further slowed down construction efforts. As a result, the housing market has struggled to keep up with demand in recent years, leading to rising prices and a highly competitive market for those looking to buy or sell homes. However, something happened in the summer of last year when the streak of prices falling began and hasn't stopped. In fact, all the major cities in the country have shown a similar decline in housing prices, with the median figure being negative 1.1% in December last year. The pandemic has caused a lot of changes to the housing market, including the emergence of new boomtowns, as people look to move out of crowded cities and into more spacious suburban or rural areas. However, even these seemingly unstoppable markets have not been immune to the recent downturn in home prices. Some of the most popular pandemic boomtowns, including Phoenix and Seattle, have seen declines of more than 10% from their 2022 peaks in June, as the supply of available homes has failed to keep up with demand. Similarly, the major West Coast cities like San Francisco and Los Angeles, which have long been popular destinations for tech workers and other professionals, have also seen a 10% decline in home prices. So what exactly is the root cause of this sudden and consistent decline in property prices all over the country? To fully understand that, you need to first know that the U.S. housing market can be broadly divided into two segments: the new home market and the existing home market. The new home market comprises newly constructed homes that have never been lived in before, while the existing home market comprises previously owned homes. The difference between the two markets are significant. In the new home market, buyers have the opportunity to customize their homes and choose from a range of modern features and amenities. In contrast, existing homes may require renovations and upgrades to meet buyers' preferences. Almost 80% of all the housing market transactions are in the existing home sector, while only 15% are in the new construction sector. Even if the new homes are not bought as much as the existing ones, they still have a stronger impact in the bigger picture because of the fact that new home construction involves a significant amount of spending on labor, materials, and services, which generates employment opportunities. Let's look at the number of new and existing houses sold in the U.S. But before that, please press that like button if you like it so far. Now let's continue. This chart represents the number of new homes sold through the years. As you can tell, it's seen its ups and downs. In January 2023, about 670,000 newly constructed homes were sold, and this number has seen a rise from November 2022, when 583,000 new homes were sold. In comparison, here, there is a clear decline in the number of existing home prices all through the last year. Where 5.6 million existing homes were sold at the start of 2022, that number dropped to just 4 million during January 2023. As of January 2023, the existing housing market has just under 3 months of supply, which is quite low, while the new home market has almost 8 months of supply, which is way higher. Generally, when the supply is short, prices go up, as we have previously discussed. But in this new house market, builders put houses on the market for a time period, and if there are fewer buyers, they simply slash the prices down to move inventory. This action has a ripple effect on the existing home market as well. So as a result, even when there is tight supply, the prices of existing homes go down instead of moving up. The peak median price of $496,800 for a new house was seen in October 2022, and since then it's fallen to reach $420,500 in January 2023. This downward pattern has driven the fall of existing home prices as well. After peaking at $413,800 in June 2022, the prices came down all the way to $359,000 in January 2023. This 15% price dip was only exceeded in history during the 2008 financial crisis, when property value fell by 20% in just 16 months. So will this pattern continue in 2023? The house mortgage rates increased throughout last year and are still at a high 6.7% rate. This rate is highly unaffordable for many Americans, and so this explains the smaller number of buyers in the market. New home construction remains oversupplied in many areas, and the situation may only worsen as buyer demand decreases due to higher interest rates. Builders may need to lower prices in order to entice buyers and sell off excess inventory. However, this may also have a ripple effect on the existing home market. With new homes priced lower, existing home sellers may have to lower their prices as well in order to compete. This could lead to a decrease in home prices overall. As the Fed has been increasing the interest rates, which have driven mortgage rates to crazy heights, more and more people are worried about being able to afford mortgage payments and survive in high inflation. If we take into account the fact that the month supply of new homes in the U.S. dropped from 10.1 in September 2022 to 7.9 in January 2023, this is evidence that the builders slashed new home prices to drive the increase in home sales. Similarly, the mortgage rates during this time were comparatively in the lower range, so the combination of low mortgage rates and low home prices resulted in the selling of some of the stale housing inventory. Now, what can we expect from the market this year? Are more price cuts coming for the new house market, and will the existing house market follow? As the mortgage rates have moved up the ladder, reading 6.7% from the low 6.13% time period, during which time the inventory got sold off, the buyers sensed the dip in their affordability and backed out from the market, even when the house prices are 15% down already. According to the Mortgage Bankers Association's weekly measurement of nationwide home loan applications, the new mortgage applications fell to the lowest levels since 1995. With the Fed not stopping to raise interest rates anytime soon, it's putting increasingly more pressure on mortgage rates and buyers' affordability. This will keep the train of price drop moving, and the areas where there was speculative home building will feel the effects more than other areas. Right now, understanding the real reason behind the current housing market crash is crucial for both buyers and sellers. It's vital to keep the rapidly happening changes in the housing market in mind and only then step into the process of buying or selling a property. Did you find this video interesting? We hope you did. Please press that like button and subscribe to our channel for more interesting content. In the end, thanks for watching, and we'll see you next time.